Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I bring you entrepreneurs, founders, executives, thought leaders in crypto and blockchain all around the world. And today I have an amazing guest who's a little bit of all four of those. His name is Chris Hermida with Switchboard. Chris, welcome.
Yeah, Jamil, it's good to be here. Thanks for having me.
Very welcome. Very welcome. So, let me ask you first. What is your background, and is it a logical background for what you're doing?
Yeah, well, I think everybody that ends up in crypto, sort of has a few detours. But I would say to the extent that it's possible, there is sort of a logical background here. Um, was an early employee at Circle, and just in terms of like getting involved in crypto, again, this was 2013, 2014. It was a totally different era and totally different time. And personally, I had a very big interest, I still do, in fintech and in payments. And a lot of the interest that I had in crypto came more from that idea that you can now have permissionless payment rails and settlement rails that can enable really frictionless commerce around the world. And Bitcoin is the first iteration of that. You now have a number of other cryptocurrencies. You have stable coins. You have really an entire market around crypto that's been built around payments, not including even more advanced smart contract use cases. But again, different era. And from there, helped build out their trading desk for a few years with some folks that now are pretty notable in the crypto ecosystem. But at the time, it was just a growing small space, and you could pretty much call anybody and they'd pick up the phone. It's the people involved in the industry. Call it prior to 2015. It was not a large industry, and certainly prior to 2017. Was fortunate enough to ride some of that wave, being part of Circle and seeing the massive growth in stablecoins and in sort of the crypto trading markets, and left in 2019 to run my own capital. Got fairly involved in the alt L1 ecosystem, seeing some of the limitations scaling some of the lower performance chains, and decided to build. Originally, actually, Switchboard, one of the products I've always wanted to see was this idea of decentralized derivatives exchanges and the idea that every asset would be freely tradable anywhere using smart contracts. In order to power that, you need some form of oracle to really relay the source of truth or the underlying price for a spot index related to that. Quickly saw that and realized you don't have, at least at the time and even now, prior to Switchboard, a great solution for permissionlessly bringing data on chain. So everything that we built came out of that idea of it should be really fast and really simple for you as a developer to bring, configure, and get the data you need on chain to help power not just decentralized derivatives, but a host of other applications. So I know that's a bit of a mouthful, but happy to share more about any of those points.
No, it's good. Yeah, no, I want to know more about what Switchboard does because I know what some of the other oracles do, right? I don't know exactly what you do, how you do it. So, how do you make it easier for developers to bring data on chain?
Yeah, so I think from just a high level perspective, and just diving, again, a lot of users may or may not be familiar with how oracles work and what they offer. But in general, if you are, say, using a DeFi derivatives protocol or using a borrow lend protocol, or using, say, a prediction market, you need some form of tooling to say what is the source of truth or what is the result or answer for this particular application. So take the example of a prediction market. There needs to be some way to say, okay, this team may have won a game, or this candidate may have won this election, et cetera, et cetera. Protocols rely on oracles in some way, shape, or form to relay that information from the real world, from off chain, or from other ecosystems on chain. Um, in terms of specifically, for developers, we make it really easy for you to permissionlessly bring the data you need on chain. So what we mean by that is if you, for example, say, Jamil, you really like the meme coin of the day. Let's say I'm making it up, Bonk with chain. Somebody, I'm sure somebody already made that. You need to create a price feed for that to be supported on, say, DeFi derivatives platforms. You can use Switchboard to permissionlessly create a data feed customized to exactly what you need to bring that price feed on chain to support, let's say, Bonk with chains.
you know, last month I read something. I think I read it on Twitter. There was a million meme coins created last month. A million. Like, how do you begin to track that kind of rate and that kind of growth? It fascinates me. Not that I'm going to buy a Funko chain.
Yeah, I mean, it's been crazy to see the growth in meme coins. I think Pump.Fund now is by far and away the largest sort of, if you use revenue, sort of on-chain metrics, application, at least on the Sol ecosystem, and I think on an application level minus L1s. So it's just been crazy to see, the level of growth that some of these apps have had, and a million different meme coins means a million different markets. There's just no way to scale that out without having permissionless infrastructure and systems in place that don't rely on sort of manual blockers to be able to integrate or to be able to create either new markets for, or create data feeds and other sort of products built on top of that.
Yeah, I'm still baffled. I'm, you know, I want to talk about the oracles, the
Mm-hmm.
history oracles. I was early in Chainlink in 2017.
Nice.
Uh, it went away because of Celsius, right? I was an early Link Marine, no longer a Link Marine. I have some Chainlink, but um, I've seen the Oracle market evolve. But I don't know how much it has. But I want to get your history of how it came to be, and what some of the advancements over the last 7 years, and why some of those early oracles are not where we think it should be.
Yeah, so the first, I guess, mainstream Oracle, if you will, was actually MakerDAO. So a lot of people really forget about this, but MakerDAO, before they supported multi-collateral and before DAI became what it is today, had this thing that they previously called DAI, then was rebranded to Psi, and effectively it was a stablecoin created borrowing against the value of Ethereum. Well, how can you do that? Well, in order to do that, you need some metric, something that says, hey, the value of Ethereum in dollars is this value. And as it just out of necessity, to just make this sort of original MakerDAO product work, they created the first on-chain Oracle using a number of both on-chain and off-chain sources, but to relay the price of ETHUSD on-chain and to use that as part of minting the original Psi as part of that. Obviously, now that's evolved to be much more, but sort of the original use cases of oracles within crypto was really that around, say, price feeds. What you've seen, and you talked about Chainlink in 2017, and there were many others, including Band and other protocols, API3, Dia. They've taken slightly different technical approaches to saying how can we relay or get various different forms of price data, and in some cases, other data on chain. Um, the biggest evolution, I would say, in the Oracle space, though, hasn't necessarily been the types of data that people have been bringing on chain. That's evolved and that's grown. It's actually been more the delivery methods. Previously, the majority of oracles used what was called a push-based system, where price updates were pushed on chain at certain intervals. So, for example, you would push an update for, say, the price of ETHUSD every minute, or based off every, say, 5% or 2% fluctuation in underlying value. That architecture has changed quite a bit over the past 3 to 4 years. And what's happened is the majority of oracles have or are moving to what's called a pull based system or on demand based system, where instead of the Oracle network saying, getting together and pushing that update on chain, instead, the user who is signing a transaction and interacting with that NDeFi protocol brings the price on chain as part of that single transaction. So there's a signature from the Oracle that's included in their transaction from, say, a front end UI that user that's streaming sort of that Oracle price. They include that TX signature. And what ends up happening is that it gets you closer to the end latency of when that original update happened as part of bringing that TX on chain. So at a high level, in terms of what sort of how that space has changed in terms of the technical aspects and the products, it's gotten cheaper, faster, and particularly in the case of Switchboard, allowed more customization and flexibility to say, instead of relying on somebody to configure, a Bitcoin USD price feed, you can now bring meme coin price feeds. You can create your own feeds for, say, prediction markets. You can create your own sort of one-off data feeds or price feeds for particular applications. And that really was not easy or possible previously without having to physically run your own infrastructure and build your own oracles the same way MakerDAO did originally in 2016.
And callbacks.
Yeah, so callbacks are sort of let's more broadly speaking, a category of functions. And what it is, if you think of, let's if you think of it from a just let me try to not use a lot of the programmer words. Um, Callbacks are triggered on chain where, say, you're an application and maybe a user wants to submit a trade. In that case, the user submits a trade and the program on chain itself requests what is the most recent price. At that point in time, the next transaction brought back on chain is that price at that point in time. So this is the absolute most efficient possible way that you can use an oracle, but it introduces some, not necessarily risk, but just some delays in the fact that it is two transactions, even if they're sequential or even if they're right after another, versus, say, a pull model, which is one transaction. And there is no right or wrong here as to is one method better than the other. It really depends on the use case, because there are use cases where one makes more sense, and there are other use cases where actually callbacks are fine.
So I'm not going to say that from a technological perspective. I agree with you. There's no right and wrong, but I'm assuming there has to be benefits and drawbacks for each of these methods. In a real life perspective, real life.
Yeah.
Well, what would be some of the drawbacks and benefits in real life situations?
Yeah. So, if you think of the push Oracle model versus, say, the pull, the biggest drawback beyond the latency aspect is actually the cost. With that original sort of Oracle model, you're constantly forced to update the price on chain, even when an action may not necessarily need it. So, as an example, if the price of ETH has not moved in, let's say, the past day, unlikely, but bear with me. In theory, you don't need to push another update on chain, right? As long as it's maintained within those price bounds. But with the nature of how push oracles were designed, there was always these scheduled and automatic updates to ensure some level of liveness. That's not necessarily a bad thing. It's just you may be paying gas fees on chain unnecessarily if those updates are not being read. Shifting over to the pull model updates are only called, or on demand or callback updates are only called when a user or a program needs to take an action. So it goes from being, hey, this needs to update every hour or every 30 minutes or every minute, to this only needs to update when either there's a liquidation that needs to happen, or when, say, a user wants to do a transaction, or when something needs to be read or done on chain. So it shifts from this, service model where you have to push these updates on a schedule to really an on-demand or just-in-time model.
Got it. So how have these oracles, these early ones, kept up, or have they not kept up?
Yeah, I mean, look, most oracles are shifting to also have some offering in the on-demand model or in this pull-based model, given the benefits it offers. Um, what I would say is that push oracles are easy to integrate, or easier to integrate, just given the nature of how they operate and the fact that all you have to do is sort of read an account on chain, versus slightly more work integrating, say, a pull or on-demand model. So again, there are benefits to the push model. The difference is, right, is with gas fees, at least on certain ecosystems and certain chains being where they are, it's much more cost effective, and it just makes more sense for more protocols to shift to the on-demand model.
Got it. Okay, so it's kind of like being kind of the whole argument of being modular or monolithic.
In some ways, yeah, I mean, in many ways, it does come down to that, right? Of there's unnecessary work being performed or things that can be optimized, and if you can optimize it, then you can return or receive some benefits that hopefully drive down costs for the users, and at least what I'm most excited about, enable new applications that didn't make sense, weren't cost effective previously because of that. So, just as an example, high performance chains enabled on, I shouldn't say they enabled, they made it feasible or more feasible to do on chain order books. Ether Delta had on chain order books on ETH around the 2017, 2016 era. It just very clearly did not scale and didn't make sense given the costs and fee structures associated with updating those orders on chain. Enter Solana with Serum, OpenBook, and some of the other innovations. You started to see more activity shifting to clubs as a result of that. We think the same thing is going to happen on chain with low cost oracles, specifically customizable low cost oracles enabled by Switchboard on these other ecosystems.
I can see it. I can see it. I think the challenge would be to get, from using my AIG hat back in the day, I built databases, is getting these gigantic corporations who have these old, sometimes Access, sometimes SQL, models, getting them over to Web3.
Mm-hmm.
That's still, I think, something that hasn't been tackled yet. How do we get them there?
Yeah, I mean, I think given the costs of distributed computing, at least with sort of current technology, there is just a premium to put things on chain. But what I would say, and I'm sure, Jamil, I don't want to speak for you, but I feel like you probably share the same thesis. I would love to see more and more of, let's call it the off-chain economy, happen on chain. And I think, the ultimate dream, at least in terms of like when I see crypto and a lot of the things that, got me really excited about the space, is to effectively move all this activity that you previously had in closed circuit sort of fiat and banking systems to an open on-chain permissionless economy, and hopefully just unlock a new level of efficiency and a new level of commerce that wasn't previously possible. I don't think it's insane to imagine that you effectively have on-chain, let's call it corporations, or on-chain sort of NetSuite, if you will, powering full suite of, let's call it ERPs and finance tooling around every aspect that would otherwise go into sort of a traditional business right now that's happening off chain, and bringing it on chain, making it more transparent, making it more accessible, and ultimately making it easier to transact without having to rely on centralized intermediaries.
I also bring up AIG for another reason. Decentralized derivatives exchanges. Derivatives were the thing that messed up the economy in 2008, credit default swaps and all that, right?
Mm-hmm.
And we have a very, very, I would say eerily similar now environment where mortgage rates are like 7.5%. I mean,
Mm-hmm.
they're not giving, dancers who had no income 5 houses, but people aren't able to sell and buy their houses now. So how do you think decentralized derivative exchanges will circumvent the next financial implosion that's coming, or if it's coming?
Well, I think to me this is one of the just key benefits of DeFi, right? Is that everything is transparent and openly accessible on a blockchain. So, for example, credit and counterparty risk, you can see it on chain. For example, if the OI on a particular instrument um, may seem excessive to somebody, or certain risks or embedded collateral seem excessive to a particular individual, you can withdraw from that particular app and not face those direct risks. And it's just open and transparent in a way that the traditional system isn't quite there. Um, I think the other thing, and it really depends on sort of your view of where a lot of the credit activity is happening, and sort of where the risks are. I think the idea of having and being able to view what collateral and what the underlying assets that are securing particular instruments is really appealing and interesting. Right now, I think a lot of the complaints about AIG and a lot of the complaints about the housing bubble back in '08, as I'm sure you remember, Jamil, was that there was no visibility into the underlying of these products. There were complaints about the rating agencies not particularly rating or assessing certain risks properly. There were a lot of things that, again, open transparency doesn't necessarily solve the underlying, but it raises awareness and hopefully, allows people to avoid making the poor decisions and poor underwriting standards that may have contributed to what happened in '08.
I like that word, visibility. I said I've lived by this mantra, for a long time, and it is we are only as sick as our secrets, right? Using that mantra, why will big tech's Web 2 secrets be their demise?
Yeah, I think that I think part of this is the trend towards many people not wanting to sell their own data and wanting to have greater data sovereignty and privacy on their own. If you think about what's been happening with, say, Google, what's been happening with Facebook, what's been happening with a lot of things recently, there have been a lot of scandals around potential abuse of, proprietary data and user information, not even including what's happened with ad brokers, what's happened with many others. And one of the cool, interesting things about Web3 is that, you ultimately have sovereignty and control over your data and yourself when you interact with various protocols or different things. Um, I think the dream of a lot of Web3, right, is that everything is opt-in, transparent, and you can choose what you share or how you get involved and interact with protocols or with other people at a surface level. If you don't want to interact with a protocol or give it your data, you don't have to, and you're not totally frozen or locked out of the service. Versus with, say, anything with Facebook, right? There's no way to opt out as a user from you giving them, let's say, Instagram, your data when you onboard there and sign there, or Threads or some of their other applications. Versus with things like Farcaster, for example, and other sort of open decentralized social media networks, you don't face those same limitations.
The same with Farcaster, you still own your data if you use Farcaster.
Right. I mean, and you can choose to interact with it. You can use the official front end, or you can go read, sort of the actual things that are happening itself on chain.
Got it. That sounds better than. See, I had a station for a channel on Facebook for my podcasts, and last time I posted on that was like over a year ago on Facebook, and I get frequently, you're in violation of trademark, you're in violation of like, out of the blue, right? I just applied for, and it's been a year and a half process, a trademark, and I'm very close to getting it. I went through and I'm like, okay, they can't say that anymore. But I don't post on Facebook much because I'm afraid of that, like them taking my data, or worse, um, artificial intelligence replicating who I am, and then that taking my data. Right? How do we circumvent that threat?
It's really hard. Um, and, I think the infrastructure for that in particular, you know, it's not quite there yet. What I would say is that, in particular, when you think of, like, for example, photos, how can you prove that, say, a photo A belongs to somebody, or B is actually real, and is, a genuine photo and not, say, a deep fake? You can use cryptography and other tooling right now to basically generate proofs when either an image is generated, or using, say, trusted hardware to say that actually this image, Jamil, of yourself is true and verified, and this is actually a like picture of yourself, versus, say, a deep fake. Um, that technology, I think, will be mainstream in the majority of devices and in the majority of applications and things that you use within the next few years, just given all the growth, the explosive growth that you've seen around the space. And by the way, like, your iPhone or Android phone right now, in most cases, already has the technology to enable this. There can already be a cryptographic proof and signatures included in the hardware of the actual camera on your phone, or in a secure enclave on your phone, where when you take a picture, you can say, actually, this picture is true and correct.
Like that. I like that. I like that idea a lot. Um, Very cool. So I want to go back to secrets, right, for a
Mm-hmm.
minute. You have switchboard secrets,
Yeah.
right? what's the benefits of switchboard secrets, and how are you going to use them to build out the global, build out Web3 globally?
Yeah. So Secrets for us is a product that lets you basically access confidential or private data and helps you bring that on chain. So the way to think about it is it's really difficult to build permissionless systems that also can securely access confidential data. And what Switchboard Secrets lets you do is, for example, in the context of, say, building a price feed that needs a private API, or say verifying a bank balance or verifying some sort of or testing some sort of confidential data that you may not necessarily want to reveal to other people. It lets us use our cryptography and software that we've built to say, actually, Jamil, this bank account that you've linked to this API belongs to you and has ABC balance, without necessarily, say, revealing your API keys to that, or even if you choose not to, right? Or if you choose, not revealing that balance as part of that. So using cryptography to bring confidential data on chain and enable users to access it in a safe, secure way, we think is just paramount for expanding Web3. Whether it's KYC, whether it's private APIs, whether it's reputation, whether it's sort of attesting to different things. This is just a space that has seen explosive growth, and we think there's going to be a lot more going forward.
And with that data they bring on chain, they can turn that into assets.
Not directly with us, but yeah, I mean, in theory, like, you can tokenize data. Yeah,
Got it.
maybe it
Okay.
sounds like a good product we should build.
It does.
No, there's lots of people working on that. So
Okay. No. Just wanted to know because yeah, thank you. So I want to thank you very much for your time today. I really enjoyed this conversation, and I have one last question. Um,
hit me.
how can people find out more information about you, about Switchboard? How can they become users of your platform? How can they, and if they're working for a corporation, how can they get out of the dinosaur age and get into the new age with you
Yeah,
guys?
so you can follow us on Twitter at Switchboard XYZ, XYZ for the Brits in the audience, or join us on Discord. If you're a developer, if you're building applications that need access to data, whether a randomness or confidential data, as part of that, you can reach out to us on Discord or shoot a note and start building at switchboard.xyz. And if you're interested in learning more about all this, I'm sure posted in the show notes, but happy to connect and happy to chat with anybody that's looking to build.
Awesome. Thank you very much for your time today.
Thank you for your time, Jamil. Yeah, it was great to connect, and excited for all the people that you're helping onboard to Web3.
Awesome.